Hey YouTube, this is Zach with Achilles Financial. Welcome back to another video, and I just want to start by congratulations to STEM and the team over there and John Carrington, the CEO. What a spectacular earnings. What you can see here on the screen is just a chart from today. This is Thinkorswim. It is TD Ameritrade's trading platform, the web version. And today is the follow-up to yesterday's video, which was the STEM earnings preview. Today I'm going to be doing my review. I'm going to cover the report. The video is definitely going to be shorter than it was yesterday. But what a spectacular quarter. They hit on many things that I highlighted they needed to do. And in leaps and bounds, they just had a stellar job. Why then did the stock crater to start the day? I'm really going to lay that blame at the feet of another popular clean energy play known as Tesla. Keep in mind that this is a company that is more than $1 trillion in market cap right now, and it has no business being there. However, you can see that they had a massive sell-off today, more than $136, almost 12%. At some point in time, it was over 12%. And I think that that was weighing very heavily on STEM. So STEM, however, was able to have very strong earnings, and they rocketed after hours. Current price is about $25.50. I'll be interested to see where they open up tomorrow, but I want to make sure that everyone who's watching this be very careful playing this post-earnings run. This is a stock that I've continuously said I'm going to continue buying until they hit $50 a share, because I'm holding the stock for 2025 is my target sell date. At this point in time, I will continue to reevaluate, but this is a stock that every payday, which is every 2 weeks, I go ahead and buy a little bit more because I love the company and I love what they're doing. John Carrington team continues to execute. So why am I saying be careful then if I love the company? Because we are going to see a lot of volatility going forward. There's going to be a lot of back and forth. And I think that people are going to be looking at this company as another high flyer, get rich quick type of company. And I just don't think that this is going to be the case. They are still maintaining a very high valuation in terms of price to sales, especially if they open up tomorrow at more than $26 a share. So I still really like the company. I think there's a lot of value here, but let's make sure that we manage expectations. The team is executing. The Q4 is going to be the big execution. So now that I'm saying how they're executing and what I expect them to do, let's go take a look at what they actually did for the quarter. So here I am on the website. I have this information readily available here. I'm really just going to focus on the financial and operating highlights that you see here. The record revenues of $39.8 million, up from $9.2 million same year ago quarter, is huge. The important thing to note is that yesterday we were looking at what they need to hit. For them to be within their range of that 20 to 30% total revenue, they needed right at 35 million. I posted that on Twitter. They came in not even at 35 million, but well above it on the high end of that estimate, at coming in at nearly 40 million in total revenue. The pertinent thing to note is that they also had a higher gross margin, as more of that revenue was coming from the Athena platform, their software platform, as opposed to coming in from strictly the hardware installation. As that continues to occur, we should expect this to continue to grow, which will continue to lend itself to high profitability, including 8% gross margin, which is great. During that same quarter, we did see the revaluation and the total recognition of those warrants. As such, we saw a crazy net income. That's really all valuation. I'm not going to focus too much on that. I don't really care about adjusted EBITDA, because adjusted EBITDA is really kind of a made up number. But last but not least, let's focus on how much cash is on hand and zero debt. The reason I want to highlight these two options is because something that they mentioned on the call is that they are continuing to evaluate a potential acquisition in the future. And I continue to see that this cash pile, this war chest, is what they're going to leverage to be able to do so. So I'd like to see this. They are a very strong balance sheet, which in this space is somewhere you definitely want to be. I want to make sure that they don't overpay for an acquisition in the future, because if you're sitting on a lot of cash, you may say, hey, this company is only 50 million, let's go out and buy it. And the company could really only be worth in real terms 25 million, and you're going to overpay. So definitely want to watch that going forward. this pipeline right here, not important whatsoever in my opinion. I don't think pipeline means anything, but what does matter is the booking and contracted backlog. What this is showcasing is not only is the company continuing to deliver at record rates, again, this is up 333% from a year ago. It's also up more than 15 million more than, or right at 15 million more from where we were in Q2. However, the contracted backlog, so these are customers who have already signed a piece of paper saying we are going to be purchasing this service, or maybe even here is our money, have already signed up more than right at $62 million, despite the fact they delivered on another 40 million of services. That is huge. The other thing that I want to see right here is this contracted assets under management, or this AUM, going to continue going up? Are they still the leader? So there's a ton to really like, because everything that I was looking for, they not only hit, but they exceeded. The other thing that I want to highlight here, and this is again right in the main component, is that they burned more cash than they expected. And that's to be understood because they said that the supply chain was also having its effect on them. However, they sound like they were able to lock in to a goal, or lock in their pipeline of products that they're able to deliver and sell on all the way through Q2 of 2022. And they're looking to have that go all the way through Q4. So it's through Q3 2022, and they're expected to lock it in for the full year 2022. That is a huge capability, meaning they can continue to grow, because keep in mind, they're locking in that supply requirement to deliver on this effort right here, this backlog that they already have. So the fact of the matter is, right now, the company, they reiterated their full year guidance of 147 million in revenue, which is still another $72 million in total revenue. Because they've already highlighted this, because they're locking that in, that means that outside of this backlog right here, if they were just to take that 72 million right here, that's still going to be right at $240 million that they would have, which would more than cover the first 3 quarters of next year in terms of backlog. So if they didn't sell another deal, they'd still be able to cover the first 3 quarters of next year. That is huge. When we look at the numbers, it just goes to showcase, again, kind of ignoring the net income, but going to focus on this revenue right here. Year over year growth is looking fantastic. And again, those margins continue to perform very, very well. So I'll link this, so if you want to go more in depth, you have the capability to read it. When I listened to the call, it sounds like there have been a number of enhancements made to the Athena platform, just showcasing the continued development in that product. As such, I continue to see a very good, strong customer experience. They continue to highlight that. They have completed one of their sites in Chile, and so they have international presence. Again, this company is growing and firing on all cylinders, and I thought that they had a very, very strong earnings report as well as earnings call. I really enjoyed hearing more about some of the items that they walked through here, including the Penske kind of case study where they highlighted the efficiencies that the company, the heavy duty truck company, has experienced, including a 40% decrease in their energy consumption. These larger providers are going to be the ones who are able to deliver, and just by word of mouth from hearing these larger companies, going to help grow their sales. So the big thing again that I wanted to highlight, they reaffirmed full year 2021 and a total full year adjusted EBITDA of 25 million. So again, it's going to be very, very strong year, and they expect to report that in February 2022. So the company is currently trading, again, despite the fact that we had the strong run at the end of the day, still trading at around what was 92x sales. That's now going to be dropped down a little bit closer to 50. We'll continue to finalize those numbers once I see everything, but the company is doing very, very well. I expect the stock to perform strongly tomorrow, and I will be saying congrats, good job, but I'm not selling at this point in time. Again, I'm looking to continue to add and to hold, but it will be interesting to see some of the volatility. I may personally sell some covered calls on that news. What I'll be looking to do is post all of my trades like I always do in the free Discord down below. If you have any questions, feel free to ask me there or in the comment section down below. I will link all of this in the description, and I look forward to talking to you all soon. Thanks. Bye.